Everything in this video is not intended as financial or investment advice and is for educational purposes only. I'm Josh Olszewicz, head of research at Valkyrie, and let's take a look at the midweek market update. I'll keep the macro side light today. It does look like next week CPI is going to come in much less than 4.9, likely somewhere around 4.2 based on estimates. Clearly Trueflation also signaling further declines in CPI, at least forecasting that. I find it hard to believe that if CPI comes in reasonably lower than last month, that the Fed's going to keep raising. It's more likely than not at this point that they're going to pause this meeting and probably consider raising on the meeting in July. Now, Canada just hiked after pausing, I think, the previous month. Australia has done it. So a lot of countries, central banks have already done this. It's not out of the question. So regardless of the odds and the probabilities that have gone back and forth on whether or not the hike will happen, at this point it's probably more likely that there is no hike next week. Now let's take a journey. Let's take a journey all the way back to 2017, which at this point was 5 years ago. I want to talk about Binance US, Coinbase, Ripple, what this may mean. This is my opinion. This isn't Valkyrie's opinion. All opinions are my own, as they say. So back in 2017, during the ICO mania, for those who don't know what that is, initial coin offerings acted very similar to IPOs in that a company had an idea and they essentially went public with a token. They owned most of the token. They marketed the token, and it was based on the efforts of few people. Seemingly classic Howey test type stuff. I'm not a lawyer, but the lawyers at that time said if these ICOs are traded on exchanges, the SEC is probably going to go after exchanges, not the ICOs individually. Now, since that time, the SEC has gone after a few ICOs. They've also gone after a few decentralized exchanges, and obviously this week they've went after Binance and Binance US along with Coinbase after FTX blew up. And it's interesting, it's somebody at that time mentioning Poloniex, and that got me thinking most of the exchanges that were around at that time in the US have all pretty much gone offshore, or they've split into these bifurcated international and US entities. Bittrex no longer in the US at all as of a few weeks ago. But essentially you have Kraken, Gemini, Coinbase, maybe Crypto.com if you want to consider that as a US reaching exchange. I think they're based in Singapore. But we don't have many exchanges left. So from a regulatory perspective, it's important, I think, to get the clarity that we're asking for. But at the same time, these exchanges know they've done things that wouldn't hold muster in traditional finance. Specifically something like this, where essentially they're using a self-regulatory principle to decide on listings. Now, Binance being the most egregious of all of them, but Coinbase certainly has had some issues there. And it's interesting, in 2021, Binance US, CZ, the CEO of Binance and Binance US, realistically, was talking about going public on the Binance US side of things. That is very unlikely to happen now. Pure speculation here, but my guess is that Binance US eventually closes as well. So I think this is completely unlikely. And interestingly enough, there was also chatter, I had to remember this, but FTX had some IPO thoughts as well. Now, at least Coinbase doesn't have a token directly. They just have the IPO, they had private raises, they had VC money. But we have these projects in crypto, for some reason, I think they can have their cake and eat more cake and keep eating cake and raise and raise and raise, have a token, do an IPO. And I just don't think that's going to work out for them most of the time. Certainly hasn't worked out for them most of the time. This is the full press release against Binance. I would definitely read it. For anybody who has been here for a few years, none of this is new whatsoever. It is, as Corey Klippenstein, I think, says in here, not even a secret. I think he says open secret down here, but it's not a secret that exchanges trade against their customers. There's some issues with custodies on tokens from time to time. Which tokens get listed, which pairs get listed, is kind of a pay-for-play sort of game. Definitely on Binance, there's a long history of this. So none of this is a surprise whatsoever. And that full filing, the full charge, the full suit here, 100 and something pages, is just littered with plenty of reasons for the SEC to go after Binance. As of a few minutes ago, Binance US said they will be delisting 40 different trading pairs. And this is sort of the next shoe to drop broadly in the markets. If the SEC is naming specific tokens in their filings against these exchanges, is the next course of action going to be delisting? Now, when it happened with Ripple, it happened directly to Ripple, and exchanges, trusts, indices had to delist Ripple, de-risk, remove it from the indices, that sort of thing. Now, these weren't necessarily named, this list here, in the suit, but it's interesting timing, obviously, that this comes when Binance US is under duress like this. There was also, I think, like a side suit, or within that large suit, the SEC said that clients' money was at risk because funds were being commingled. It's also, I believe, very difficult to pull large sums of USD off of Binance US because they had previously lost banking partnerships. So what we're seeing now is a large spread between the white here, which is BTC USD on Coinbase versus BTC USD on Binance US. And you often see this when users are trying to leave an exchange and they can't do it on the fiat rails. So they buy whatever they can. Usually it's BTC, but it can be anything. And you get this large spread here, this large arb that's unclosable because no one can really get fiat in effectively. And more importantly, no one wants to send coins here to sell, right? So you get this heavy buy side that pushes the price up. And that really only started happening after this information disseminated that the SEC was talking about seizing assets or closing the exchange or something to that effect. The client's money was at significant risk. So it's not a surprise that we're seeing this. And when there were issues with Tether back in 2018, and there was questions of whether Tether was fully backed, fully solvent, we saw the same thing happen at Bitfinex, where in the absolute pits and despair of a low volatility 2018, Bitfinex had a massive spike in price relative to the rest of the market here because people were buying Bitcoin to leave the exchange. And I was going to check the Binance US wallets, the transparency of the flows. DeFi Llama delisted their information here. I don't know why, but there may be other ways to check this. But as of yesterday, there was very little flowing out of Binance US from what I could tell. Now, if we look at Binance.com, the outflows are still pretty significant. Something else attached to that suit, those charges the SEC filed, was specifically naming the BNB token. The BNB token was minted by Binance, and early on it was used as a utility token. You'd hold it in your account. It would act as a fee reduction for trading. It was a utility token with a price. It was a part of the Binance walled garden. It made a lot of sense. Then they expanded it to a full-blown Binance Smart Chain, essentially a clone of Ethereum. And then you had a bunch of Binance ICOs, IEOs, initial exchange offerings on that chain. And again, the pay-to-play model is a part of this here because the exchange, the ICOs needed to buy the BNB in order to participate in this ecosystem. This is Binance US, and those of us in the industry have long questioned why this was actually listed on Binance US, because it very likely met conditions to be a security, because it is fully owned and adjusted, burned by Binance. It is not really decentralized in any way. Neither is Binance Smart Chain. That is mostly validated and owned by Binance. So again, none of this comes as a surprise. Even Samuel Bankman-Fried, the criminal mastermind, knew better not to list FTT in the US. I don't believe this was actually listed on FTX US. And I think what CZ was insinuating in the suit, at least the chat logs that were in the SEC filing, essentially suggesting that we'll list it here and we'll pay the fine and we'll figure it out. Now, like I said, they do manipulate the supply in that there is a burn mechanism based on profits of the exchange. So you could argue some sort of revenue share model here happens quarterly. They're going to remove 100 million BNB from the circulating supply. If we look at all of these burns that have happened since 2017, 23 of them, This is based off information you can actually see on the chain. There's always been questions of where is this coming from? Is this already non-circulating supply? That's a whole separate issue. But based on the information available, we can surmise that this much has been burned, essentially. And if we look at the USD values, it makes sense based on bull and bear markets when there was very little trading activity and when trading activity picked up across the board. And the reason this is interesting as well, because in those suits, I don't know if this was Binance or the Coinbase suit, probably the Binance suit, where the SEC is specifically mentioning Solana, their deflationary model, their burns, how they sort of market the burn idea in this deflationary mechanism. And the reason this is interesting is because, well, ETH does that as well. So do most chains have this transaction fee burning mechanism. So there's always been this question of whether or not the SEC will come after ETH in some way for an unregistered securities offering, even though it's probably beyond the statute of limitations. Do they go after Vitalik? Do they go after Joe Lubin? Do they go after Consensus? Not sure. But there is a similar situation going on with ETH. I don't say this to scare people out of ETH. It's just, most proof of stake chains at this point have this transaction fee burning mechanism. And it's important to know what other chains are doing so that you can understand Bitcoin is different than this. Bitcoin doesn't have a PR department. They don't have quarterly reports. They don't have marketing. It's just, it's an entity that exists and is brought into being on its own. Now, if we look at the Coinbase suit, it, to me, is much lighter than the Binance suit, in that the Binance charges seem to acknowledge internally that they're selling unregistered securities. Here, much like Kraken, they are specifically naming staking as a service program for Coinbase, as well as discussing unregistered securities and being a broker and clearing agency without a license. I'm not going to go into all of that, but the biggest problem I've always had with Coinbase is they have things like a venture arm. This is the Coinbase Ventures portfolio. Currently, I believe this is up to date on Masari here. And early on, the Coinbase Venture portfolio would take interest in a specific token or project, and then eventually would get listed on Coinbase. This was what happened with ZRX, which is a token for a decentralized exchange. Again, November 2017, I'm saying, look, I think it's going to get added to Coinbase. 3 of the advisors are all previous Coinbase employees. And sure enough, in a year and change, it did get listed. And this is just another example of, is this illegal? Is this okay? I don't know. But it does seem that there is a potential conflict of interest here because you've got one side of the house taking interest before the listing occurs and then potentially offloading that token. That's always been a potential issue with the venture side of these exchanges. And now for Coinbase, the question is whether or not they're going to delist a bunch of tokens, whether or not they are going to remove staking, which they say they're not. They're going to fight this. There's a bigger issue here about pooled assets and how that affects unregistered securities rulings. The assumption here that is, as an individual, you can stake no problem. But when we introduce an intermediary into that, that's where things seem to cross into securities territory. Ultimately, what we really need is clear regulations and rules around, okay, if this token follows XYZ, it is a security. If you want it on your exchange, you need to be a registered securities exchange. You need to follow these rules. These tokens can only be traded by these kinds of investors, traders. It needs to be ring-fenced from the other stuff that's deemed different in some way. There are exchanges that offer securities, crypto securities specifically, and we may eventually come to that on Coinbase. It may just be different types of tokens traded in different spots. There's nothing wrong with being a security, but there is something wrong with being an unregistered security and not following the rules, and that's where the SEC and Gary Gensler are coming after these exchanges and tokens for that very thing. Now, the next question regarding Ripple is there's this open lawsuit going on 2 years or more at this point against Ripple by the SEC, accusing the same thing, essentially unregistered securities offering. And really what the Ripple got in trouble for, these are the Ripple sales of Ripple the company. And this immediately is where I send up red flags, because Ripple the company has distanced themselves repeatedly from the token, which was known as Ripple, which was later changed to be referred to as XRP, whatever they want to say in the marketing department there. Purposeful brand confusion is part of the MO here, but what they were doing was selling, they being Ripple the company, was selling Ripple the token on exchanges. And that's where the SEC took interest. And since the suit, they've stopped that. But they continue to sell what they call institutional sales, OTC. Now, I have no doubt personally that Ripple, the network, has value for cross-border payments. I don't think you need the token for that. That's the problem. I think how it works even on their own network, RippleNet or whatever they call it now, you don't need the token to settle at all. You don't need to hold the token. You don't need to touch the token. So, what is the token really for? What does it do? Has always been the question of everyone since Ripple's existence. Ripple does have an escrow where they pull these coins in and out automatically. They being the network. Again, there's a lot of very vague rationale. You can sort of say, well, is Ripple the company a part of this, or is this truly decentralized? If you look at the validators, they certainly aren't, in my opinion, decentralized. But in any event, Ripple also talking about an IPO after their SEC lawsuit ends. And again, we have this have our cake and eat it too syndrome, which I just do not understand. After, selling hundreds of millions of dollars in Ripple tokens, we must have an IPO. And the CEO, Brad Garlinghouse, has said previously that, this is 2020 now, but they would not be profitable without selling the token. So to me, it seems like an open and shut case, but I don't know. We'll see what SEC decides. I think as an industry, many people are rooting for Ripple because an SEC win here may just bring down most of the ICOs that have ever existed. But again, if I'm going back to my 2017, 2016 days, that doesn't seem out of the question. So that's my journey on what happened with Binance and Coinbase. Really no surprises as far as those filings, and certainly expect more coming for Binance US and Binance in the coming days here. On the technical side of the house, we do still remain leaning bearish in the near term. Over the long term, not concerned in the slightest. The SEC going after exchanges does not fundamentally undermine the health of any of these networks. Does it make them harder to use, harder to access? From a retail perspective, potentially yes. Certainly from an institutional perspective, if you're seeing these headlines, you want nothing to do with crypto, you want nothing to do with Coinbase or Binance, you want to most likely de-risk, get rid of those allocations, or your job is on the line. If you're caught sitting in an exchange that's being charged with commingling funds, that's a big no-no, I'm assuming, for most people. So over time, when this eventually all gets cleaned up and cleared out, and it's clear what's going on in the United States, we will become a better industry for it. But in the now, we saw quite impressive volatility yesterday after that Coinbase news at 9 a.m. before US Open, and essentially retraced the entirety of that Binance news candle from the day before. Today we're bouncing all around all over the place. But something else to remember here is two of the biggest market makers, Jump and Jane Street, left weeks ago, likely understanding what's coming as far as these suits against exchanges by regulators in the US. So that will greatly affect liquidity, and other than Bitcoin, likely see very thin books. Now, Bitcoin probably has the strongest bid and ask side generally, but you still see volatility like this on any given day. So still leans bearish, still has this head and shoulders type of expectation for a breakdown, measures to around 24 to 25, and you've got the 200-day moving average here as well. It's falling out of this pitchfork, which also doesn't signify a bullish continuation. Now, let's say it recovers here. Let's say we make a new higher high. Then it's a different conversation. If we're back above 28.8, 29, then it's a midline conversation of the pitchfork. But in the moment, I would certainly expect some test of the 200-day moving average. Eventually, this is dynamic, so it's going to keep moving up. But 25 to 23 makes sense to me. If we look at the cloud as well, the cloud helps you determine bullish or bearish trend. It literally means at a glance. So instantly you know, are we above the cloud, are we below the cloud, or are we in the cloud? When we're in the cloud, much like flying a plane, you know, that's where the turbulence is. So this is where trend decisions are made. Now, when we flip from being above the cloud to in the cloud, the usual direction is an attempt to touch the other edge of the cloud. I refer to these as edge-to-edge trades. They're not always as clean as March SVB news. All those bank closures, they're not usually as messy as currently either. And you can see two here that didn't quite work out, this being a pretty cut and dry example of what you don't want to see from an edge-to-edge trade. This was when FTX blew up. But in any event, I still expect an attempt to reach the other end of the cloud here, again, somewhere between 24 and 25. So this does to me still lean bearish. Now, much like the pitchfork, if we get back above the cloud, if we get a bullish TK cross, these blue and red lines here, then the expectation is bullish continuation. We may need to rinse out some of these regulatory jitters before we have any shot at moving higher in the near term. And looking at the weekly, we're also very close to flirting with a drop below the 20-week moving average. Historically, it's been quite binary most of the time, in that if we are below the 20-week, we are bearish. If we are above, we are bullish. And if we cross that 20-week moving average, we do have a pretty good chance at reaching the other end of the Bollinger Band here. The Bollinger Bands are 2 standard deviations away from the midline. So there is the potential for a move to 22, 21. Again, this is dynamic, so it's going to move around a little bit. But much like those other targets, the confluence is there for the technicals to attempt to move below 25K. One thing we may see here is some sort of falling wedge situation, a tap of this bottom band, and then an attempt at a recovery. But in the moment here, again, this doesn't, to me, lean bullish either. So still pretty bearish viewpoint all around. Looking at ETH, essentially the same technical setup here. We're basically in the cloud, again, bearish but messy chart pattern with an expectation at a 200-day moving average. Retest, potentially even below the cloud here, somewhere between 15 and 1600. But until we're back above the cloud with a bullish TK cross, there is not an expectation of bullish continuation in the near term. This does have a pretty large multi-month fractal of Adam and Eve, ascending triangle. It keeps making higher lows. Over time, this may be okay. You know, for instance, if the SEC comes out and says, well, ETH is definitely not a security, which they haven't done yet, then there will be regulatory clarity there. They did list ETH in one of the suits, I think Coinbase, but I think that was more in relation to the staking side of things. And it's not like being a security is a bad thing. It's just having this wishy-washy label isn't helping exchanges or allocators looking to make decisions on whether or not to allocate into this. It has been down slightly less than Bitcoin on most days, and I think the staking component is catching up to it, in that millions of staked ETH now, 3 million, are removed from circulation since mid-April, and there just aren't a lot of sellers in general. And really, you could say the same thing with Bitcoin, in that non-zero balances keep rising, and coins that haven't moved over the past year as a percentage of the network keep rising. So you have people who are still buying here, retail, stacking sats as it were, buying ETH, staking it, whatever, who, regardless of the news, really have no interest in selling at these levels. So that to me, again, speaks to the long-term health of Bitcoin and Ethereum. Lastly, I'll just mention Bitcoin dominance. This is Bitcoin market cap against the entirety of the industry, everything else, ETH, stablecoins, everything. And if regulators are specifically mentioning tokens that may get delisted from exchanges, to me, there's certainly an expectation that Bitcoin would gain strength here. And we're certainly seeing that over the past week on a relative basis. And I fully expect this to continue into the 50s as far as dominance is concerned, as US retail and institutional, really, investors start making allocation decisions based on potential exchange delistings. On top of that, this is a very bullish technical pattern. You can call it a range, you can call it a quadruple top, whatever it is. It looks like it wants to go higher here. So that's all for this one. We really need from legislatures and Congress at this point to make some rulings, pass some laws on what exchanges can do, what stablecoins can do. There was a bill introduced in the House, I believe, last week, attempting to do some of that. But until that point, exchanges and tokens are just going to keep getting picked apart by the SEC. This video is for informational purposes only, and the opinions expressed are not financial or investment advice. All opinions are my own and do not reflect the opinions of Valkyrie Investments and its affiliates. No fiduciary obligation or duty exists or is created between you and Valkyrie Investments or its affiliates, including me, by virtue of any opinions expressed in this video.